Welcome back to Quest for Profits. Today we're strapping in for a ride into the future with Joby Aviation.
Sounds exciting.
That's Joby on the ticker tape for those following along.
Okay.
We're talking electric air taxis, people.
And not just some distant sci-fi dream.
Right.
What's fascinating here is that Joby is already making some serious moves in a market that's ripe for a shakeup.
So let's unpack this.
Okay.
We've got analyst reports from MarketBeat buzzing about Joby's long-term growth potential.
Yeah.
We're talking a potential 90% surge.
Wow.
Now, I know what you might be thinking. Didn't Joby take a little bit of a nosedive earlier this year?
You're right. Joby stock did experience a significant drop, around 60% earlier this year.
Yeah.
It has been holding relatively steady since April, though.
So is this the calm before the takeoff?
Yeah.
What has those analysts so optimistic?
A few things. First, Joby is hitting some major milestones. We're talking initial aircraft deliveries, progress on certifications. They're not messing around. And get this, they're not limiting themselves to just one market. They're eyeing commercial operations in the U.S., the Middle East, and even have a deal brewing with the Department of Defense.
A deal with the Department of Defense.
Yeah.
That's huge.
Yeah.
What kind of impact could that have on their growth?
It's definitely a major vote of confidence, not just for Joby, but for the entire eVTOL sector.
Right.
It signals that this isn't just a novelty. It has real-world applications.
Yeah.
And it's not just the DoD deal that has analysts excited. Their vertically integrated manufacturing process is a game changer.
Okay, for those of us who aren't aerospace
Yeah.
engineers, what does vertically integrated manufacturing even mean? And why is it such a big deal?
Great question.
Yeah.
It means Joby controls their entire production process from start to finish.
Wow.
They're not relying on a bunch of different suppliers. They're building parts, assembling aircraft, the whole shebang. Think of it like Tesla building their own batteries. It gives them tighter control over quality, efficiency, and ultimately their bottom line.
So it's not just about the cool factor of flying taxis.
Right.
There's a solid business strategy here.
Yep.
Is that why analysts are slapping buy ratings on Joby left and right?
Precisely.
Okay.
Canaccord Genuity, for example, has a buy rating with a price target of $10.50.
Okay.
That's nearly double Joby's current share price.
Wow.
And they're not alone.
Okay.
H.C. Wainwright and Cantor Fitzgerald also have buy ratings on the stock.
Yeah.
There's a definite sense that Joby is undervalued right now, but let's be realistic.
Yeah.
It's not all smooth sailing for Joby.
Right. Those August earnings reports had some investors a little spooked about their path to profitability.
Yeah, it's understandable. Investors are looking for that path to profitability, and those August earnings did raise some questions.
Mm-hmm.
But it's important to remember that Joby's playing the long game here. This is a company with serious financial backing, including a recent $500 million investment from Toyota.
Okay, so they have some deep pockets backing them up.
Right.
But still, those capital expenditures and R&D costs are huge.
Mm-hmm.
Those aren't going away anytime soon.
Absolutely. Developing cutting-edge technology is a costly endeavor.
Yeah.
Investors are going to be paying close attention to their next earnings report, expected at the end of this month,
Right.
to see if Joby is on track to manage those costs while hitting their ambitious production goals.
So it sounds like there are two key things to watch for.
Yeah.
Can Joby manage those cash flow concerns while still investing heavily in their growth?
Right.
And will their vertical integration strategy, which sounds amazing on paper, potentially slow down their FAA certification?
You've hit the nail on the head. Those are the million-dollar questions.
Right.
And this is where it becomes crucial for investors to look beyond the allure of technology. Understanding a company's financials and the regulatory landscape is just as critical as understanding the technology itself.
Mm-hmm.
Maybe even more so for making informed investment decisions.
It's easy to get caught up in the hype of flying taxis, but at the end of the day, it's about making smart, strategic decisions.
Exactly.
So let's shift gears a bit and talk about some strategies for getting involved.
Okay.
Let's say someone listening is intrigued by Joby's potential, but wants to navigate this turbulent market strategically.
Mm-hmm.
What are some options?
That's where a well-defined investment strategy is essential. And there are a couple of interesting approaches to consider here given Joby's current position and long-term potential.
All right, so we've talked about Joby's potential, we've explored the risks, and now for the part I know many of you have been waiting for. Let's talk strategy.
Let's do it.
Specifically, two strategies that came up in our research that could be interesting for those looking to take a calculated leap into Joby's airspace, so to speak.
Okay.
Now, a quick disclaimer before we get started.
Yeah.
This is for informational purposes only and not to be taken as financial advice.
Right.
You always do your own research, consult with a financial professional, all that good stuff.
Of course.
Okay, with that out of the way.
Yeah.
Let's talk about averaging down.
Mm.
Expert speaker, want to break that one down for us?
Absolutely. Averaging down can be a great strategy for investors who believe in a company's long-term potential, but aren't too keen on trying to time the market perfectly.
Right.
Essentially, you're starting with a portion of your intended investment and then buying more shares if the price dips, lowering your average cost per share over time.
So instead of putting all your eggs in one basket, you're spreading out your investment and potentially taking advantage of those dips in the stock price.
Exactly. It's about managing risk and having the discipline to buy more when a stock is down, not just when it's soaring.
Right.
It's not for the faint of heart, but it can be an effective way to build a position in a stock you believe in, especially when a stock is believed to be trading below fair value.
Got it. And then we've got our second strategy, which is definitely a bit more advanced, selling puts.
Yeah.
This one's not for beginners, is it?
You're right. Selling puts is an options trading strategy, and it requires a solid understanding of options, including things like implied volatility and those all-important Greeks.
Right.
It's not something to just jump into without doing your homework.
For those who aren't familiar, what are the Greeks when we're talking about options trading?
Essentially, the Greeks are just fancy names for different measures of risk and potential price movement in options contracts.
Okay.
For example, there's delta, which measures how much an options price is expected to change based on a $1 move in the underlying stock, and theta, which looks at how much value an option loses each day as it gets closer to its expiration date.
Okay, so these Greeks can help us make more informed decisions when selling puts.
Exactly.
But for those who are comfortable with options, how could selling puts play out with a stock like Joby?
In simple terms, by selling a put option, you're essentially giving someone else the right, but not the obligation, to sell you 100 shares of Joby at a specific price, called the strike price, before a certain date, the expiration date.
Okay.
Now, if the stock price stays above your chosen strike price, the option expires worthless, and you get to keep the premium you received for selling that option.
Oh, wow. So there's potential for some upfront profit there, that premium.
Right.
But what happens if the stock price goes down below that strike price you set?
In that case, you might be assigned those shares at the strike price minus the premium you already pocketed.
Okay.
This is often okay, because if you are bullish on the stock long term, then you are able to enter at a more favorable price.
Right.
It's all about weighing those risks and rewards.
Yeah.
Again, this is why it's so crucial to understand options trading thoroughly before even considering this type of strategy.
Yeah.
We can't emphasize that enough.
Absolutely. Knowledge is power, especially in the world of investing.
For sure.
Well, on that note, I think it's time to wrap up our deep dive into Joby Aviation.
Yeah.
We've covered a lot of ground today, from analyst predictions and milestones to potential risks and those all-important investment strategies.
It's an exciting space to be following, for sure.
Absolutely. And for our listeners, as you continue your own exploration of Joby and this rapidly evolving industry, here's a final thought to ponder.
Okay.
Given the regulatory hurdles, the technological advancements still to come, and the potential for increased competition, what other factors might impact Joby's success or failure in the long run? Keep those brains buzzing, folks. Thanks for joining us for another deep dive.
Thanks, everyone.
Don't forget to subscribe and join us again as we explore more fascinating companies and industries.
Sounds good.
Until next time, happy investing.